Hi guys, welcome back to the channel. If you are new, please consider subscribing so that you do not miss future videos. Like this video, that's the only thing I'll ever ask you to do. You do not pay for anything. I will not ask you to buy anything. If you're looking to download stuff, there are links in the description box below. Visit those blogs and see if you cannot find what you're looking for. Okay, let's get into today's video. Ways to avoid being caught in manipulation. I'll just give you 2 tips to avoid getting caught in manipulation. What do we mean by manipulation? You know what happens in trading. Let's see, let's drop down to the daily. Let's drop out to the daily and maybe let's find some levels. Let's mark some levels. Let's make this thing, let's make this line thicker. Let's make it thicker. You forgive me, I actually have flu, but I love you guys so much that even when I've got flu, I'm still making videos for you guys. Let's say we have our line there. This is what? This is daily time frame. And this is a simple strategy that I'll also get into for people who want to learn how to trade with this strategy. So what do we mean by manipulation? You see what has been happening here. Let's drop down maybe to the hourly just to illustrate this. You saw we drew our lines, our pink lines on the daily time frame, our support and resistance lines on the daily time frame. But if you drop down to the hourly, you can see these huge wicks, and even these playing around this area. What is this? It's basically an idea of manipulation, because what we're going to do if we're trading support and resistance, supply and demand, obviously you would find that many traders, as price dropped all this way, then it came to this area where we were targeting what? On the daily, where we were targeting to buy, because that's our area of support. But because the guys that control the market, they are also watching this level, what they usually do is they know that most traders will start buying here. I don't know if you can see my red line there. Let me change the color. Let me change color from red to, actually picking the wrong line. I need this red one. Let's change the color to line. I hope you can see the line there. It's still thick. Maybe let's do this. Now I've changed the wrong thing. Okay, finally. Okay, so because price has dropped down to the area of support, obviously everyone will be looking to what? To buy, because we are expecting prices to go back up. But the guys that actually have a lot of money in the markets obviously are not going to just come and buy where everyone else is buying, because they've got large orders to fulfill. Okay, no, the pink one, I did the green one there. obviously they've got large orders that they need to fill, either from banks, from big companies, from whoever they are trading for, from wherever they are going to be trading for. So these guys, they've got millions and millions of dollars. They probably want to change for euros or stuff like that, another currency like that. This thing you can try and see it on other charts with other forex pairs. So they are not exactly going to buy at this level that everyone else is buying at, because what is going to happen is, I'm trying to get this line, what is going to happen is the moment that they enter here and buy, actually the market will start moving up. And when it does start moving up, then it means by the time they are going to have all their millions of dollars filled by the market, price would have moved so much that it's not even favorable or profitable for them. So what do? They manipulate price. I'm trying to get this green thing. Okay, let's unselect this. Okay. So what happens is, now that everyone has watched price coming down to this level, and obviously everyone is watching to see price going back up, obviously the new traders are going to quickly jump in and buy, because what we have come to a level of support. Why I'm against people just jumping in blindly without finding reason to do that is because this usually happens at these levels. Why? We said these guys that are also eyeing this level, the market makers, the big banks, the guys that really have the money to move the market, they know that everyone also is watching this level. But if they enter the market at this same level with everybody else, the market is going to run away from them as well. Before all their orders are going to be filled, the market has already what? Taken off. So instead of having all their orders filled around this area, they are not going to want to have all their orders filled, because if they want to have all their orders filled from this point, because they are using moving so much money, they will have their orders filled at levels that are not favorable to them. They will lose money here. Beer prices would become so unfavorable for them. So what is the trick they use? Obviously it's manipulation. This is where, when price comes here, what they do is they take it down a bit. This blue candles with this huge wick, they take it down a notch. What happens is, they already know that people who have bought there, and this is an hourly candle, people who have bought there have their stop losses in this region. They have their stop losses in this area, especially retail traders. We have our stop losses in this region. And what happens also is, when price begins to break through here, many people who had their sell stops here, hoping that the market will continue going down, are going to be triggered with their sales, and they are going to what? Be in the money for just a short while. And people were also watching this level, when they see price breaking through and continuing, they start selling. They think there's momentum to what? To sell. So everybody starts selling here. And technically, if you think about it, if you have your stop losses here, those are sell orders. So what do? These guys, is they take the market down so that they find the most appropriate price to start buying, to be able to fill their millions of dollars that they need to move. So that's essentially an idea of how manipulation happens. So they come here, they take out all the stop losses for people who had jumped in and bought there. People do not wait. People were not patient. They take out the stop losses there. Then also people who do not wait for confirmation. People who jumped in and started selling. They gave them a little bit of money there, and boom, they go back up and what? Collect also their stop losses in this zone. That's basically what manipulation is. That gives you an idea of what we mean by manipulation. So the manipulation is, yes, your analysis was correct that the market is going to go back up, but whilst you were correct, you were still taken out. Yes, you were correct that the market will eventually go up, but while being correct, you were still taken out. You were still taken out. And it happens all the time. See, same deal happened again here. So, how do you prevent this from happening to you? This happens whether you are trading horizontal support and support and resistance, or whether you are trading with trend lines. Of course, that's a bad one, but I'm just trying to illustrate something. It happens. It happens. You think that I'm trying to illustrate something, so it's not going to be perfect. But you think that now we've broken the trend line and we are kind of dancing above this trend line, so obviously we are going to what? To quickly just go this way. It didn't exactly happen, but you get the point. So it usually happens at these support and resistance levels, whether you are using horizontal ones or you're using slanted ones. It's something that you need to note when it comes to manipulation. How do you avoid it is the purpose of this video. What you want to do first of all is to understand the session that you are trading. The session that you are trading, you find that manipulation often happens in the most volatile sessions. That is your London session and your New York session. That's usually when you see the most manipulation happening in the market. So beware of manipulation in the London session and the New York session. Secondly, you need to be aware that manipulation also happens at the overlap of market sessions. For example, if you're not late in the day or late at night, depending on where you are in the world, or early in the morning, where the New York session ends and uh, overlaps into the Asian session, you'll find that the most brokers, they start widening the spread, and there's a lot of whipsawing that happens. It's a pity that I'm not recording this at the end of the New York session or into the Asian session. There's a lot of whipsaws that happens, and it also happens when we are closing the Asian session and we are getting into the London session. So usually when the market sessions are overlapping, there is a lot of whipsaws and manipulation, trying to shake people out of their trades, trying to confuse people and things like that. So you might be correct with your analysis, but because of the volatility and the shaking around that's happening, you might actually get confused and stay out of the market, or you might actually close your trade early, or actually better, you might actually close it in a loss. And when you're trading in a loss, somebody somewhere has made some money. So that's things to be aware of. Then what you also want to do to avoid manipulation is also to always be patient. Be patient. Don't always jump into the markets. Of course, you saw this candle dropping this way. It doesn't mean automatically jump in. It doesn't mean automatically jump in. Wait for confirmation. What you probably do is you leave that thing to drop, and you might have to sit on your hands and watch it drop. But at some point, trust me, it's going to want to come back into this level. And it's probably going to give you a signal that it's not going to go up. It's now going to continue going down. That's where you actually get in the market. Don't be these guys. Don't be these guys. Be patient. You might in this move. It might not be as small as this. It might actually be a lot of pips, and you might be thinking, "Ah, I'm just waiting on my doing nothing." And these guys are making a lot of money. Something like this. Here, of course, this happened about what 67 pips that you probably watched just going like I should have sold, I should have sold here. But trust me, selling here, selling there is not always profitable like this. What you want to do is to actually wait for the market to come back to your level here. If it does this and you are not in the market, fine. Find another pair to trade, or better still, stay out of the market. What you want to do is usually wait for the retracement. You can actually trade the retracement and target that zone. 70 pips, you collect your 70 pips. Then you wait for what? Confirmation that we are again going back down. That's where you will be able to take a safe trade. That's where you'll be able to take a safe trade. So patience, we said, things that can help you to avoid market manipulation is, first of all, understand that volatile sessions in the forex market always result in manipulation. It's the nature of the game. There's nothing that you can do about it. So watch out for manipulation at levels during the New York session and the London session. Then you also want to watch out for manipulation when we have session crossovers, when we are crossing over from the New York session to the Asian session, from the Asian session to the London session. There's going to be a lot of whipsawing, taking people out of their trades and stuff like that. Then I said, patience. Learn to be patient. Don't be the person always being the person to quickly jump in. We saw price coming to this support area, and you are the first one. Boom, you've bought, and you close your laptop hoping that price will go this way. Most of the time, it doesn't. Sometimes it does. I'm not saying that it doesn't. Like we saw here, sometimes it does, depending on the momentum that the market has. Sometimes it does, and you make your money. But most of the time, trust me, they are going to play around this area and even break through and go back up. Then they go. That's what they usually do. So just watch out for those things when you are trading in the markets. That's manipulation. That's how you will be able to avoid being manipulated by the guys that move the money in the markets. Like this video, subscribe if you're not yet subscribed. I'm going to be teaching about a lot of other things that you need to watch out for in order to be a safe trader, in order to limit your losses. Limit your losses. Until next time, if you have questions, leave them in the comment section below. Bye.